Talk today.
Cayman Islands' foremost listeners' participation program.
Talk today.
Because there are more questions than answers.
What the public is saying.
Waiting to take your calls right now. Sterling Dwayne Ebanks.
Hey, good afternoon and welcome back. Thank you for joining us for the special edition of Talk Today, coming to you live from the Ritz-Carlton for the 5th Annual Cayman Investment Forum. And joining me is our very own Kathy Miller. And we have the opportunity to speak with one of the presenters this evening, Mr. Luke Roman. Kathy, I invite you to do the honors with the intro.
All right, thank you. So we're lucky enough to have Luke before he goes on stage this afternoon. Luke Roman is the founder of Forest for the Trees, a macro-thematic research firm catering to institutions and high net worth individuals. Mr. Groman sums a wide variety of macroeconomic, thematic, and sector trends in an unconventional manner to identify investable, developing economic bottlenecks. A graduate of the University of Cincinnati, Mr. Groman received his MBA from Case Western Reserve University and his CFA designation in 2003. He began his career in the mid-1990s at Midwest Research, where he became a partner. In 2006, Mr. Groman left FTN Midwest to become a founding partner of Cleveland Research Company. In 2014, he founded Forest for the Trees, where he would apply what customers and former colleagues consistently described as a, quote, unique ability to put the big picture pieces together. Luke Roman will be discussing money as a political instrument and the possible scenario of the US dollar monopoly folding.
Good afternoon, Mr. Roman. Thank you for joining us, sir. Thank you. And as Catherine reviewed the bio, a number of interesting things. Good afternoon to you, sir.
Good afternoon to you. Thank you for having me on the show.
When we look at the whole idea of sort of financial instruments, and for those who follow it, whether the U.S. Federal Reserve is going to be employing any sort of fiscal monetary policies, we see their approach. But when we think of money in particular, and this whole idea that money is a political instrument and its utilization over the post-war World War II period, many will think, who are not in the financial sector, money as a political instrument, manipulating, increasing inflation, devaluing currencies in order to price commodities. Your thoughts, sir?
Absolutely, yeah. We talk quite a bit about money as a political instrument. It's not all that well understood, even in financial circles, and so I think your point's very well taken, that it's not very much focused on. But historically, commodities being priced only in the U.S. dollar, and oil in particular, have been a very powerful political weapon, and it is, in essence, required much of the world to hold dollars if they needed to import oil and other commodities, and by virtue of them needing to do that, they were helping to fund persistent U.S. government deficits. And this is not some conspiracy or necessarily mean the United States is bad. It was just the way the world worked. The world's currency and money system worked after 1971 when the United States closed the gold window under President Nixon. And what you're starting to see really in the immediate aftermath of the great financial crisis, a number of different global players, China, the World Bank, the G20, Russia, the IMF, increasingly making comments that that the dollar's primacy for pricing commodities in particular as a reserve currency or primary reserve currency more broadly was really the root cause, or was increasingly the root cause of crises and imbalances that we've increasingly seen over the last 10, 15, 20, 30 years. And so it's turned into this political contest where you have seen certain emerging markets like China, like Russia, beginning to set up alternatives to the dollar as a means of trying to counterbalance the dollar's power in pricing these commodities. And when you look at it through the world through this lens of this emerging competing system, so to speak, much of some of what we've seen over the last 5 to 10 years in particular in the immediate aftermath of the global financial crisis starts to look a little differently and even in some cases start to make real sense.
Now, from that perspective, Mr. Grover, when people listen to talk about petrodollars, they see the influence of the Middle East, in particular in OPEC. We're seeing BRICS, for instance, coming out, and that challenge to the Western approach. Could that lead to a shift in geopolitical landscape?
Absolutely, I think it could. And I think that's ultimately what, if you look at historically, again, the primacy of the dollar, you're coming to this real bottleneck where the United States, by virtue of its demographics, has 75 million or so baby boomers. They are owed a lot of money in entitlements, $100 trillion plus, and the United States does not have that money. And so if you are China, if you're Russia, if you're any of these emerging markets, number one, emerging markets in aggregate are now the majority of global GDP for the first time in 350 years. China is now the world's biggest oil importer, no longer the United States. Yet, if oil is only priced in dollars, as the Americans print this $100 trillion, you're going to see high rates, very high rates of oil price inflation and broad inflation. We saw this a little bit in 2009 through 2011 with the first round of QE from the United States. The United States didn't have much inflation, but you saw it in the Middle East, and it led to some of the Arabs. It was a catalyst for the Arab Spring in some ways. You saw high rates of inflation in China, American creditors, and so they need to move away. If they are going to be able to operate an independent monetary policy, political independence from the United States dollar, they need to be able to have an alternative system where they can effectively print their own currency for commodity imports.
Now, from that perspective, we're looking at the US dollar and potentially not being the world's currency. The euro under threat, what would then replace the US dollar?
To me, I don't think there will be another national currency that replaces the dollar. And I don't think whether it's China, whether it's the euro, wants that mantle. It's part of what we're discussing is that, it was famously called the exorbitant privilege by Charles de Gaulle. And it was to a certain extent, but if you look at what's happened in the United States, the exorbitant privilege is increasingly becoming an exorbitant burden. And you've started to see that manifest itself politically in the United States with some of the populism, the election of Donald Trump, arguably. And so it is no longer crystal clear that having this reserve currency is a good thing from the standpoint of a broad economic positive, as it arguably was for some period of time. And I think if you're China, if you're Europe, the price to pay for having a reserve currency as the dollar is structured is too high. You have to outsource your manufacturing. You have to run up large amounts of debt. I don't think it's something culturally the Chinese, the Europeans are interested in, and I don't think the Japanese or the British have really the option to do that. So by process of elimination, what should begin to rise in prominence as the dollar fades in prominence as the global reserve currency for a number of reasons is it has to be some sort of neutral settlement asset. So it has to be, whether it's IMF SDRs, right? You know what I'm saying? The SDRs, for some reason that's somehow escaped my mind. Or it has to be some sort of gold component or neutral, non-national settlement asset to sort of resolve that. And that's where we think it's going.
But then with that, we see the sort of flight to Swiss francs. So much so that the Swiss banks are able to say, we'll hold your money, we will actually charge you for it. That's a reversal. The dollar becoming less attractive, but yet the Swiss franc, for instance, that neutrality. How do we explain that?
I think it is. I think it's a function of relative sizes, right? So historically, if you look at a nation with the economic statistics of the United States, and just take the United States off the banner of the name, it would look like Argentina. It would look like Russia before crises. It would look like Southeast Asia in the late 90s. And in those cases, what you did was very easy. You sold Argentine pesos and you moved them into dollars. But what we're talking about is the dollar here, and the dollar is so much bigger than it. So where do you go if the dollar has a problem in this? You can try to go to Swiss francs, but the dollar is just so much bigger. And so it puts the Swiss central bank in this position of, if everyone tries to crowd into Swiss francs out of dollars, you're quickly going to reprice the Swiss franc to such a level to make it economically uncompetitive, vis-a-vis its peers in Europe. And so it's been it ultimately speaks to the challenge of moving away from the system. It is just the dollar is just so big, it makes it, our case has been that where the money ultimately has been flowing has been into U.S. equities, big cap equities, where there is this realization the dollar has a problem. Where do you go to escape the dollar? You really don't. But the next best answer, the next best solution, is to move into big cap U.S. equities, where you're still getting a coupon in terms of the dividend, but you also have exposure where, if the dollar does weaken as a result of this, the earnings power of these companies is going to rise commensurate or even more than the amount, and you should be able to end up even or even ahead in that process.
But they're all U.S. dollar based.
What's that?
And they're all U.S. dollar based.
They're all U.S. dollar based. Yes, as a U.S. and you've seen it, right, in terms of corporate earnings as the dollar has weakened year to date. There's been a turnaround in U.S. Corporate earnings. There's been a turnaround in U.S. federal tax receipts. So the weaker dollar is not necessarily, depending who you are and how you're positioned, a bad thing. It's simply, to us, appears to be the release valve.
So at the end of the day, that potential for the U.S. dollar monopoly falling, as it were, remote.
I think it is inevitable, but inevitable doesn't make it imminent, to your point. And it also has the ability to be resolved very well and very positively for pretty much everyone in the world, with perhaps the exception of Washington, and Washington with the ability to run endless deficits. I think it's very good for much of the U.S., very good for much of the world. But it also has a potential to end very badly. Historically, if you read the history books, transitions between reserve currency and monetary systems have oftentimes been very tumultuous periods in history. And so we're optimistic it can be resolved via the former, but we're definitely cognizant, and we talk with our clients, that there is a possibility that it's the latter. Ultimately, I don't think it's nearly as far away as most people think. If you do some simple math on, again, it's U.S. demographics, the growth of entitlements, we're probably within a presidential administration or two of it becoming a very acute problem.
Well, with all that said, it seems like a Dan Brown novel to make in a political and economic thriller, potential inflationary tendencies, a changing geopolitical landscape. Maybe, Mr. Groman, you don't want to author that one.
I'm sorry?
So maybe you might want to author that political.
It sounds like a very interesting book.
Yeah. Well, thank you so much. Any final thoughts you may want to leave with our listening audience?
I would just, if people are interested in seeing some more of our work or our thoughts, please feel free to go to our website. It's www.fftt, Frank Tom -LLC. I also have a pretty active Twitter feed, and it's at Luke Groman.
All right, thank you much, Luke Groman, for joining us. And as we come back from the break, we hope to have the chance to speak to the Honorable Tara Rivers. Please stay tuned for Talk Today.
Talk today. But I do have some questions.
Talk today. Cayman Islands' foremost listeners' participation program.
Talk today.
Because there are more questions than answers.
What the public is saying.
Waiting to take your calls right now. Sterling Dwayne Ebanks.
Hey, good afternoon and welcome back. Thank you for joining us here for the special edition of Talk Today. Coming to you live from the Ritz-Carlton for the 5th Annual Cayman Investment Forum. And special thanks to Catherine Miller for helping us to facilitate this discussion, especially for being able to snag our next guest, incredibly educated intellectual who also serves as our Minister of Financial Services with an amazingly hectic schedule. And today she found a few minutes. So thank you, Honorable Tara Rivers, for joining us.
Well, you're welcome, and thank you for having me.
Well, it is, for us an opportune time to be able to recognize that the importance of our offshore financial center to the global economy, but for those listening, especially, through this forum, to appreciate that all that the government does in relation to its laws, to its promotions, it isn't because we're looking just for employment. We play a very, very important role globally.
We absolutely do. We are definitely a part of the value creation for the global economy. Certainly it's a pleasure for me to be here in the capacity of Minister for Financial Services. I was in the middle of a very interesting talk just now, but of course I had to make the time to come out and speak to you and the listening audience. And I think this particular forum is going to be an interesting one. It's really talking about, the speaker right now is talking about the death of the dollar. And all of the various permutations and combinations of why that is, both from a technological as well as from a geopolitical, and then of course the combination of the two. So I think so far it's been a very fascinating experience to be here and have the opportunity to listen to a very learned professor from the U.S., who is looking at it from a historical perspective. And I think that's really important because, of course, we're very big on looking at the historical perspective of Cayman, from whence we came and to where we're going. And certainly that is very, very important to do, even within the realm of financial services. And, of course, where our roots were, but also to talk about, to track, to plot where is it that we want to go and how we want to maintain not just our global position as an international financial center and as a premier center at that, but where are the opportunities for us to actually look at creating and carving out that niche so we can continue to play the role that we do play in, and as I said, creating value for the global economy.
Well, we got a chance to speak to professors in the next half hour there, but after the 1 o'clock hour. But you're right, having people like, with that intellect, with that insight, and with that influence on our shores, our local industry experts get a chance, but also our government officials, to see how this could impact us. Maybe from there we can help to, cement our strategy, maybe devise or employ with the private sector to make Cayman not just attractive and competitive, but positions to be that key influence.
No, absolutely. I mean, this is an area that is certainly something that the global financial services industry is very keen to look at, to see what opportunities can be explored. The very nature, as I said, of money and the interaction of money and the death of cash is something that we certainly, as a jurisdiction, we need to certainly keep an eye on to see, as I said, what are the global trends that are emerging and how we can certainly make sure that we continue to be competitive and to take advantage of the various opportunities that may emerge as a result.
Indeed, and when we talk about, the past, companies, even governments talking about being paperless in order to make it more efficient, effective, and less costly. But we're now talking about going cashless.
Exactly, and I mean, I think this again, it's a very fascinating area. I have to admit, I'm certainly not a technological expert, so I was finding the talk quite fascinating from that perspective. But certainly, I think, as I said, from the financial services perspective, it is an area that is changing the way we do business. It is changing the way business is conducted, moving to this kind of paperless, cashless society, but yet still being able to transfer value and create value in such a way that keeps the global economy and the engine running.
And obviously it causes governments to be concerned with not just security of data and data protection, but facilitate legislation to ensure that this type of commerce, because it goes beyond the traditional term e-commerce.
Correct. I think, it is definitely multifaceted, and it's something that, as a legislator, it is, I felt it was important for me to be here to try to gain as much of this insight as possible, because it will need to inform policy and legislation, as you said, to support the functioning of this system, because you're right. Data and data protection and data collection is going to be so critical in being able to actually facilitate this type of currency on a global scale. But of course, we know we live in a society where data protection is absolutely critical. We see the number of breaches worldwide, and I mean, the technology is advancing at such a pace. But then, of course, you have those that are able to crack the code as well too. So I mean, we certainly need to put not just the legislative infrastructure, but also focusing on putting the technological infrastructure to support as well.
And with that, I mean, we were just simultaneously at the UCCI, there's their annual STEM conference, and one of the presenters is going to be looking at cryptocurrencies, data security, and that whole node. So they go hand in hand. Our students get an opportunity to be exposed to potential careers. We get to appreciate the significance of the emerging trends. I see Cayman being poised.
No, absolutely. I mean, if you just think about it from, it just came to me while you were talking, and again, from a very, very basic level of, this kind of paperless currency. I recently purchased one of the Apple iCard, $25 card to put on my son's iPad. And in that in itself, so that translates the cost, the cash in hand to this virtual dollar that can be spent to purchase whatever apps or whatever, games that would be appropriate. And that so that is a form of this paperless currency that in its very, very basic form that I think the average person can understand. But we're taking this to, a nth degree, a much, much higher level when we talk about the moving from a completely, cash-based to a cashless type of society.
Yeah, and with that, physical plastic piece of thing that you now have that you can type in a code, you imagine that there are those who utilize, not to the extent of Bitcoin, but they utilize some sort of electronic account where, a value is put into this thing from which purchases are made and then traded off just like you would do. It's all electronic. You no longer have that thing in your hand. So cash is no longer king?
No, well, I'm telling you, I mean, it blows, it could really blow your mind if you think about it. We moved from the barter system to the coins and cash, and now we're moving into something that is, very different. And we probably will see it in our lifetime too, the pace of the technological advancement that we're seeing.
Well, that's still like the barter system. I give you 2 straw hats for your wampus.
Well, there you go. If you can find me some wampus, I'll definitely take you up on that one.
There you go. Well, Honourable Minister, thank you so much. And
You're welcome.
You get a chance to enjoy the rest of the
Yes,
conference.
I'm going to pop back into the speech now and hopefully catch the remaining portion of the talk.
Will do. Honourable Tara Rivers, thank you for joining us. And to our listeners,
You're
we're
most welcome.
live from the Ritz-Carlton for the 5th annual Cayman Investment Forum. And as we come back from the news break momentarily, we'll continue our discussion. We will have opportunity to speak to the CFA Society reps. We also have a chance to speak to some of the more of the guests, the Professor Rebecca Spang, who's just been referenced by Honourable Rivers, who are going to give a presentation. So the presenters are here, or we're going to get a chance to talk to them. And when we come back, please join us.
And now, Sterling Dwayne Ebanks.
Hey, good afternoon. Welcome back to Talk Today. Thank you for joining us. And if you have a question, we can still take your calls. I believe we'll do our best. Somehow we'll figure that out. We're live on location here from the Ritz-Carlton for the 5th annual Cayman Investment Forum. Thank you for listening, for joining us. And let's have a chance now to speak to Mr. Emil Kalinowski. You may have heard him with us sometime recently on Talk Today when we were talking about the forum, but he's here again with us. Emil, thanks for your time and spending a little bit, of your time this afternoon with us.
Thank you very much, Sterling. It's a real thrill for me. This is, who knew how it was going to turn out, but we've got our record attendance numbers, and the speakers are wonderful, and your audience will hear 4 more of them today, and it's going very well. I'm very happy about it.
Well, we know that these, conferences, these events take a lot of time and effort. There's a lot of work that goes in. It's not just that we're attractive to people who want to come here, and the closer we get to the cold weather that some countries experience, the more perhaps it is that they may be inclined to come. But these individuals are busy in their own rights. They have their careers, their demands, their clients, their families. They just can't jump up and leave, even if they wanted to. So a lot of pre-planning.
A lot of pre-planning, but the island sold itself. The lady you're going to speak to next, Rebecca Spang, she opened up her presentation by saying that she gets a reasonable number of requests to come speak at conferences, and she turns them down. But when she heard where it was, who else was coming, and the general, the outline and what was going to happen, she said yes. She's going to be here for several days. She's doing a speaking engagement with 100 women in finance as well. So she'll be here a long time.
If I could, I certainly want to talk about the conference and have you share with us so that as a listening public, we start to increasingly appreciate the value added. It's obviously the professionals here in the industry get to benefit. We get to promote our jurisdiction. But as you shared, Cayman sells itself, the safety, the competence, the convenience, the connectivity, as it were. But those are important for all of us as ambassadors to make every concerted effort to not just to promote, but to preserve.
I didn't appreciate it until I started putting this conference together. Previous years, I was just an attendee. This year, I was in there face first and doing a lot of the work and organizing it. And I grew to appreciate the island and the community much more than I ever did before, because while I was doing plenty of work to make it come together, I was just taken by how much effort other people in our organization, members of the community, came together to help us get to this, just a little event where we were trying to share some knowledge. So it turned out to be a meaningful community linking event for me. I was surprised.
Well, I'm glad that you had that positive experience, and I think that gives us greater insight and appreciation, and perhaps why we, as a collective unit, need to continue to exert every effort in order to preserve what we have here. We take it for granted.
Yeah, we take it for granted, but maybe the other speakers will talk about their view regarding the future, and I think it generally points to that we will not be taking it for granted sometime in the near future, and we will appreciate what we have here and how blessed we are.
Indeed, amen to that. As we look at Emil Kalinowski, as we look at this particular conference and this series of speakers, what do you want the listeners to appreciate specifically?
That history shows us the stability we become used to is not permanent. And there are moments in time when the course of nature makes a leap forward. We're used to linear time, incremental movement forward, just because that's what we're used to day to day. But there are moments in time, moments in history, which I think our speakers are pointing to, when we make non-linear leaps forward, and those times are volatile and destabilizing, and we need to do our best to make sure we have the support of our community, that we have connections to our community, and just prepare for that possibility. I suppose I don't have full time to go into all the details,
fair enough.
But you kind of see what I'm...
Yeah, and as you said, I'm reminded of those of us who followed, Luke Groman, for instance. His insight sort of says that history is replete with examples of history repeating itself. And with that in mind, something that may have happened a century ago, or even a decade ago, or it could be a few decades, they're not impossible for them to repeat and to have a compounded effect. So you need to have not just a grounding and an understanding of what transpired, but potential how that could impact future revelations.
I can't say it any better. That's exactly it. The conference turns out to be a bit of a history lesson, and applies those lessons as a warning or a heads up to the people who are in attendance regarding, I would say, the next 10 years or so.
Now, from that perspective, conferences like these, for the attendees, especially those who are on island in the industry, this is not just a day off work. They still have to conduct their business and the like. How do you think this would benefit them in advising their clients, making their practices and the industry that much better position?
Well, I hope they consider the possibilities that our speakers are raising, that well, I hate to repeat myself, but it's just we assume time is linear and incremental, and history shows that there are moments that resemble our present era very closely, where time is not incremental, and that has an impact on our savings and our community, and there's disorder, and then we coalesce and we fight through these difficult times, and we emerge on the other side, our unified culture. So I'm looking forward to that golden age on the other side.
Well, I think that's the goal, and if we work towards that sort of collective objective, and to recognize that if we are able to maintain that future prosperity, but also that stability, it means a concerted effort on all of our parts.
That's absolutely right. Right now, it's easy to be disunified, to be complaining about things that are not going well in our lives, in our community, with our government. But that cannot go on forever. And there are cyclical turnarounds when we become unified again, and we look forward with optimism to the future.
But this is an investment forum. Now, for those listening, are they to conclude that this is just all about economics and finance, or is there a bigger picture that maybe underpinned with the economics.
I hope so. That's what I've been saying. I have skipped right over the economics and the financial aspect. It is an investment forum, and that's the superficial layer. But if you scratch that veneer of economics and finance off, then what you see is this reaches down into society, politics, community, religion, and just our social relation to each other, and basic relations.
We're speaking, from the CFA Society in the Cayman Islands, Emil Kalinowski. But Emil, when we think of economics, for instance, and we think of financial stability, and for those who have it, for instance, feel that sense of comfort, whatever level that is. For some, they could have billions and still not feel secure. And others, they have pennies, but they feel a sense of peace. When we reach that level of economic security and stability that we believe, is our goal, or is our, those who have that are accused of being in a position to think more deeply, to act more profoundly, because they have that security. For those on the periphery who are still scratching to get there, is it that the wealth then needs to be sort of transferred more through effort, not just taxation?
A couple of years ago, I would have said no. I would have said that that's not appropriate to do. But the more I learn, and then the more I see inequality rising within nations, the more I accept the idea that there perhaps needs to be some sort of wealth distribution, which is I'm so surprised I'm saying this, because if 2 years ago you would have talked to me and you would have said that, I would say you're crazy. But I believe just the more I read about history, the more I believe we have to consider things that we're not comfortable with. And for me, that sort of wealth distribution through effort, through taxation, I think it should be on the table, because we see inequality rising around the world, even in countries with wonderful programs to generate equality amongst the group. We see inequality spreading even there. So it's a global phenomenon, and it's eventually unhealthy, and it'll be rebalanced.
Well, I think from what you shared, I'll present in wealth creation. You see, rising tide floats all ships. So if we can encourage entrepreneurship through our education initiatives, we can get people more comfortable with economic finance and sort of social entrepreneurship as well, then that wealth redistribution, wealth creation could be something that could be achieved not only, as you shared, through taxation and redistribution, but through people understanding that they can make more of a contribution, gain more of a financial reward, not just in that traditional sense that we've seen in the past.
I agree with you. Absolutely.
All
Absolutely.
Right. Well, Mr. Emil, I certainly appreciate you sharing some time with us and for our listeners. We are at the Cayman Investment Forum. If you were to say one final thing to our listeners, not just for this conference, but for future conferences that you were to put on, or for the Cayman sort of economic miracle that we seem to have had for these decades, what would it be? What would you say that it was helping to preserve, promote, protect what we have, but also to be a partner in it?
I would say that there are many different sorts of capital. This is an investment forum, so we think of financial capital, and we think of growing that sort of capital. But there are many different kinds of capital. There's your health capital. There's your capital that you build with your community members, with your family. So there are many different ways you can build up capital. It doesn't have to be financial. And I would just recommend to everybody to build up some sort of capital.
All right. Thank you very much, Emil Kalinowski. When we come back from the break, a chance to continue our discussion. We're looking forward to a short talk with Professor Rebecca Spang in a bit. I will ask you to join us for that. So please stay tuned for Talk Today.
Cayman Islands' foremost listeners' participation program. Because there are more questions than answers.
What the public is saying.
Waiting to take your calls right now. Sterling Dwayne Ebanks.
Hey, good afternoon. Welcome back to Talk Today. Thank you for joining us as we bring to you live the Cayman Investment Forum. And I have the wonderful company now of Professor Rebecca Spang. She gave this sort of opening address earlier. We were eagerly anticipating a chance to chat with her. And it is truly an honor, Professor, not only to speak with you, but to pretend I'm a student in the classroom, sort of an independent study. I get to learn some more.
What a lovely idea.
Good
Right.
afternoon.
Thank you so much.
When we look at sometimes the whole idea that money, and what's that song? Money, money, money.
Yes.
We see money. What was my Latin? Radix malorum est cupidus. The love of money is the root of all evil. We go to church and we talk. Sometimes we hear the pastor saying, "Oh, it's easier, for a camel to get through the idle needle than for a rich man to get into heaven." Money is positioned as this horrible thing. Is it?
Oh, what a great question. I think the examples you're just referring to are about how people use their money and how they think about it and when they value it. So it seems to me that if money can be the root of all evil, it could also be the root of all good, right? If we think about charity, we think about philanthropy, if we think about the sort of international connections made through global markets, there's a lot of good money can do as well.
And that's the thing, but money is changing, not just from the perspective of people utilizing the different instruments, not just in its valuations relative to other currencies and the like, but our use and abuse of money, but also the changing face of money.
Well, that has two forms. One is debates, which certainly have been very common in the U.S. just in the past year or so, about whose face should be on the money. Right? The argument is that Andrew Jackson was a slave owner. He exterminated a lot of Native Americans. He drove them from lands they'd inhabited. Why is he on the $20 bill as opposed to Harriet Tubman, who helped people stay alive? So there's that argument literally about the changing face of money. And we've also just seen in Britain the new bills depicting Jane Austen. So that's all super interesting. The other changing face of money is the so-called war on cash. The number of authors who argue that bills, and particularly large denomination ones, are mainly used for tax evasion, they circulate in the black market, and that actually we'd be much better off if we got rid of physical money and just had digital money.
Now, from that perspective, many would say that if we no longer have that physical money, we talked about the unbanked economy. Are we going to be displacing those people even further?
Yeah, that's a really important question. One thing that's happened in Kenya is that lots of people don't have bank accounts, but they have a mobile payment system linked to their phone. So that means they're not tied to the banks, but Vodafone has a monopoly. So Vodafone becomes a kind of monopoly banker in Kenya. It has made it possible for these people to do all sorts of transactions, but I think it's worth paying attention to.
And we always talk about disruptive technologies, and many people heard about disruptive and think, oh my goodness, they're unruly. But this is something different. Now, that level of sort of emerging technology and the take-up by the populace, will that displace the quote-unquote traditional banking?
It seems to be happening at different paces in different places. So I believe right now it's only 20% or less of transactions in Sweden are made with cash. And there are plenty of people in Norway who don't even know whose face is on the money because they never see it. Conversely, I believe worldwide it's still 60 to 65% of transactions are in cash. So it's not an even distribution all around the planet.
And it doesn't seem to be that the developed or the developing economies seem to have a monopoly in one way or the other. It's changing depending on country specific almost.
It's very country specific. You see very different behaviors. Germany, for instance, Germans have always been credit averse. They buy things in cash. They don't buy houses. They would rather rent. So there are all these things that are very specific to national cultures, and it's not obvious that's going to change soon.
Now, with that, as we speak to Professor Rebecca Spang, as we look at the whole idea of money, we look at the history of money, we're seeing increasingly that whether we go to the early days of Bretton Woods after the World War II, to the victor go the spoils, as it were, to now the threat to some national currencies, to the emergence of Bitcoin and cryptocurrencies. Where does that leave us?
Well, it seems to me that an important thing to know is that money's value depends not on its past, but on how many people want to accept it. So if we had 2 billion people willing to be paid in Bitcoin, Bitcoin would be a very important currency. But we don't have that. And when we think about the value of Bitcoin, we translate it into a certain number of dollars or euros or pounds to say, wow, it's really going up. We don't talk about the dollar as a certain number of Bitcoins.
So acceptance, credibility, accessibility, all the things that made, in her sense, that traditional money, that medium of exchange.
Yes.
Whether it's matchsticks and some environs, or whether it's the U.S. greenback.
Right.
Still looking for money.
Still looking for money, and the crucial point is it takes a long time for one of these disruptive innovations to become a tradition, to become normal. And the thing about money that most of us have experienced, not if we lived in Argentina over the course of the past 20 years, or Israel 30, 40 years ago when they had hyperinflation, but most of us have lived in fairly stable monetary regimes where we didn't have to think about money very hard. It was just kind of normal. And with these new disruptive technologies, you really have to make a conscious choice. Money works better if you don't have to think about it too much.
Hey, we're accustomed to go into that ATM machine, for instance, or otherwise. Now, we look at, but this is the UK, for instance, getting rid of the $1 bill in paper or the pound note and having a coin.
Yes.
So other countries, perhaps in the East, looking at getting rid of larger bills.
Yeah.
How do we reconcile that? Is that a conflict, or is it the same thing in the reverse?
I don't think it's a conflict. I think part of the argument for getting rid of the pound bill and going to coins was about the convenience of vending machines. And conversely, a lot of the argument, as I said, about big denomination bills is that they circulate in the black market. Ordinarily, we don't hand over stacks of $100 bills.
It's easier to, as you referenced, whether it's for some criminal or activity otherwise. Yeah. A large $100 bill or $1,000 bill or a $10,000 note. Right. One of them is much easier to hand over than, $1 million $1 bills.
Very much so. Yeah.
Much easier to transport as well. Yeah. Now, in closing, Emile mentioned your first book.
Oh.
I promise I'll ask about it.
Okay.
Share with us.
So my first book is called The Invention of the Restaurant. And it asks an apparently very simple question, which is, why are there restaurants? And it might seem there's an obvious answer because people are hungry, but there are many, many other ways of getting food. And what's absolutely fascinating is that establishments that are called restaurants date from the 1760s. Before that, there were taverns, there were inns, there were caterers. There was nothing called a restaurant. Moreover, the first restaurants, they announced themselves as places of restoration. That's where the word comes from. Restaurer in French is to restore or to refresh. And what needed to be restored was the appetite of people who were, quote unquote, too weak to eat an evening meal. So in the beginning, you went to a restaurant not to eat,
To be restored.
to be restored.
Well, I tell you what, I love eating, I love cooking, and I just read a book that some of my children found. How do you read that? It talked about that perfect lunch, that companion, and it was interesting. So I have to put that next side to your book now and read it.
Thank you.
Well, thank you very, very much for joining us.
Thank you. This was a really fun conversation.
Well, I learned a lot, and I certainly enjoyed meeting you, and I hope that you will enjoy Cayman and return again as you wish.
Thanks.
All right, Professor Rebecca Spang here at the Cayman Investment Forum, and we're going to pause and take a short break momentarily, but it is open line. Phone lines are open if you want to call and share your thoughts. When we come back, the chance to speak to another one of the presenters, Mr. Jeffrey Snyder. He's going to talk about the rise and fall of shadow money and the dark leverage. No, it's not Star Wars. So stay tuned for Talk Today.
Talk today. But I do have some questions. Talk today.
Cayman Islands' foremost listeners participation program.
Talk today.
Because there are more questions than answers.
What the public is saying.
Waiting to take your calls right now. Sterling Dwayne Ebanks.
Hey, good afternoon and welcome back, and thank you for joining us. And a special thanks to Kathy Miller for helping to put together this particular production of Talk Today. Coming to you live for the 5th Annual Cayman Investment Forum. And our next guest is Jeff Snyder. Kathy, you do a great job. Your voice sounds so informative.
Well, thank you. I'd have to say, doing a little bit of background research on our next guest and his topic, the topic left me totally in the dark. So
no pun.
Hopefully he'll definitely shed some light on that. I'm here to introduce Jeffrey Snyder, a graduate of Canisius College. Jeffrey Snyder is head of global investment research for Alhambra Investment Partners. In addition to economic analysis posted daily at alhambrapartners.com, he is published nationally at Seeking Alpha, Real Clear Markets, Zero Hedge, Newsmax, and Yahoo Finance. Mr. Snyder will be discussing shadow money and its various aliases, Eurodollars, wholesale funding, and credit-based capital, as well as the role of shadow money in the global monetary system.
Thank you, Kathy. And Mr. Snyder, welcome. Thank you for joining us.
Thank you for having me.
I know a number of us have aliases, but when you think of money as an alias, and the idea of shadow money in particular, we better outset what is shadow money, and then how does that come about?
Well, it's really a kind of alternate form of the way banks operate on a global basis. The money isn't actually more like a currency system. It's more like a way for banks to engage in global commerce. And the way it works in the Eurodollar system is that there's no actual geographical boundaries. It's a national or international currency. And because of that, it skirts a lot of the regulations that apply to national-based currencies. And therefore, it can take any number of forms in any number of ways, and in a lot of ways that it does happen do not fall onto traditional accounting systems, bank balance sheets, and things like that. So it is, in essence, off in the shadows, a hidden world of global finance and money.
But that's for those listening, and they're thinking, well, money. They look in their pockets, their billfolds and the like, and they see this physical, tangible thing. There may be those individuals who, right now, may have different currencies, physical currencies, in their pockets. Is that the same idea?
Well, that's where it all started. I mean, obviously, the currency system started it as physical form, but in the 1950s and the 1960s, the system evolved, especially international, especially here in the Cayman Islands. The Cayman Islands played a significant role in this Eurodollar evolution, was that banks decided it was far more efficient if they could operate with no currency at all, because it's cumbersome to have currency. And so it's much easier just to maintain a ledger balance, essentially a system of IOUs, where banks trade back and forth liabilities of whatever form they see fit. It's far more efficient.
Now, I'm glad that you opened that door, because I wanted to ask from that perspective, and thank you for doing that. We see offshore financial centers, but in particular the Cayman Islands playing the role that it does. Many people with great respect in the media, politicians aspiring or otherwise, those who are seasoned, making comments about Cayman or offshore financial centers and not truly appreciating the importance to the global sort of stability that we have economically and financially.
Well, in some of the data we do have, for example, the Treasury International Capital, or TIC, the Cayman Islands and the Caribbean in general is the second largest geographical segment for dollar flow. So, I mean, this whole system doesn't work without the Cayman Islands and the offshore system in particular, without the island banks playing a huge role in that.
Now, from that perspective, you're speaking to Sir Jeff Snyder. When we're looking at the shadow money and we're seeing transactions, maybe it's a large aircraft purchase, and the ledger balances as you see with offset. If one would think, you go to a bank and you have to physically put the cash, 747 and bring it over, or you get a piece of paper or plastic. Now we're talking about accounting entry in the state. And the denominations, there's taxation and the relative regimes of cross-border currencies play a role in ensuring that stability?
Taxation is an issue, of course, but I think more than that, it's monetary and bank regulation. That's what drove the original Eurodollar system and this ledger system was the fact that, particularly in London, particularly in the Cayman Islands, Tokyo, and some other places around the world, it was essentially a regulatory black hole, if you will, that allowed banks to increase their liabilities in the most efficient way possible. So when you talk about the purchase of an aircraft across any kind of boundaries, what we're really talking about is not somebody putting up physical currency to buy the aircraft. They're usually going to open up some kind of debt. And how does that debt become financed? That's what we're really talking about here, is how does the bank finance the debt that goes into the aircraft purchase? Because there's no currency in any of it. It's simply the movement of ledger balances from one entity to another, to another, to another.
Now, from that perspective, then, are we looking at, as perhaps we heard earlier, and one of the presenters will share later, Mr. Groman, talking about, a national currency, in this case, the US dollar, no longer having the global significance. Is this potentially, and how would this potentially impact the idea of currency transactions and the trading of and purchase of goods such as aircraft financing?
Well, we've already seen that for the last 10 years it's been a major problem because the Eurodollar system doesn't work anymore. It stopped working in August of 2007. And even Cayman Island banks don't do it much anymore. According to the data we do have, the Cayman Island banks and the Caribbean banks have been getting out of the dollar business since 2011. So there is definitely an open door for some kind of alternative. I just don't think there is anything available at the moment to take that role immediately, which is why we've been stuck for the last 10 years with a system that doesn't really work.
Now, with that, we're seeing every challenge comes an emerging opportunity. The dollar played a role, for the last almost a century, at least since the Second World War. What potential could take its place?
I think some of the cryptocurrencies have potential, not in their current form. I don't think Bitcoin survives. I think that's too early or too emergent of a technology. But blockchain technology overall, because it's a dispersed technology, it doesn't know any borders like the Eurodollar doesn't know any borders. There is potential for a private replacement to the Eurodollar system in something like a cryptocurrency, especially if it can establish some kind of widespread adoption, even among the banks themselves. If the banks start working on cryptocurrencies, which a lot of them have, then we can expect that there is, as you said, there's an opportunity there for something to take the place of a system that doesn't work. And if it gets to a sufficient enough critical mass, it could be the case where we see a total regime change.
Now, with that private thing, so where would the role of central banks come in, and including the U.S. Federal Reserve?
Well, that would depend on what kind of a system it is, because obviously we want, or central banks want a role in all this. The government's going to want a role in all of this. And the central banks, it's not really clear how they would have a role in this. So it would be a matter of compatibility. Is a cryptocurrency system compatible with one central bank, many central banks? I mean, what kind of structure are we talking about here? Are we talking about a global decentralized structure? There may not be a role for central banks, and we may not want a role for central banks because they haven't really performed all that well for a very long time. So it's really, it's a political issue as much as an economic or a monetary one.
So what would drive it? The economic side, the capitalistic approach, or the political side? They may look at other issues, including taxation and wealth redistribution.
I think that there's more of a role for free market and competition. The question is whether or not that will be accepted and how much it will be accepted at the political level. So, I mean, you could have a bunch of cryptocurrencies fighting it out for which one actually performs the best, and at the end of the day, the U.S. government, the Chinese government, whoever would say, no, we're not going to participate, and that could potentially cause a problem, because if the cryptocurrency is adopted wide enough and far enough, it's going to be used regardless. And so then you have essentially a dual system like we've seen throughout history.
Now, two things I want to ask, and ask you to remind me so I don't forget it. When we talk about this disruptive technology using perhaps even blockchain, we're seeing more and more countries considering cashless society, as we heard earlier from Professor Swang. But prior to that, the idea that China, for instance, and the global economy utilizing and denominating trade within the US dollar, and a potential impact, and to what extent, for inflation, for continued turmoil as we rebalance and try to revalue whatever this new thing emerges and whatever value is equated?
Yeah, there's always the risk of disruption, and it's a disruptive technology. So, the big question, I think, is not just what comes next, but how do we get from here to there? And how do we do it in a way that makes sense and in a way that is the least disruptive? And I don't know if you can really estimate how that would be, particularly given that it's been already 10 years of a system that doesn't work. How much time does it have left before something organically takes its place because people are fed up?
Potentially, then, could we go back to a gold standard?
Of course. I mean, gold historically has played a central role because it's easy money. People understand what gold is. Maybe not so much today, but I mean, that was the driving benefit of a gold standard, was you didn't need to explain it to the person you were trading with. Everybody knew the terms of a gold standard. That's one way that the cryptocurrencies have a disadvantage, because people don't really understand what they are and how they are. And so that will have to be overcome, and it's a benefit that the gold standard doesn't have. But, certainly, it may become a combination. Maybe it's a cryptocurrency convertible into gold. And so then you drive, a free medium, modern medium of exchange together with a store of value of gold, and, maybe that works.
All right. Now, from that, as we look at Brexit, for instance, and the challenges potentially to the UK as well as the EU, how does this fit into this global picture?
As far as the political?
Yeah.
Yeah, I think it's all one and the same. It's the fact that we have monetary dysfunction that drives economic dysfunction. And this is a global thing because it's a global currency. And so as prolonged periods of global economic dysfunction usually end in political and social instability. And we've already seen that. I mean, Brexit, as you mentioned, the U.S. presidential election, and various. Brazil is a basket case. There's a lot of hotspots politically and socially around the world that are tied into the fact that the global economy essentially has never recovered despite 10 years, and people won't put up with that forever.
Now, with that, given that the West, as it were, sort of dominated, but given the global sort of emergence of the developing economies, whether it's the BRICS, as it were, are we seeing a geopolitical shift that China and Russia, for instance, would play a greater role economically, not just politically?
Well, I actually think that they would like to, but I don't think they can. I think the Chinese are in much worse economic shape than most people realize. The Chinese economy is not growing well at all, and it has its own inherent contradictions that relate to the dollar as well as their internal bubble problems and credit and things like that. So it may be that the Chinese are in worse shape. We know the Russians are. The Russians may want to reorient the world too, but I question whether or not they have the ability to. And so I think the preferred answer here is that we don't try to make separate pieces out of what is one dysfunctional whole. We try to make a functional whole out of the separate pieces.
I like the way you put that. And the takeaway for those listening, long-term growth, 10 years, stability, and economic prosperity, or political turmoil and social unrest?
Well, I mean, I think the range of possibilities for how this turns out is broad. I mean, there are several scenarios that could be very good. I do believe that if we do solve the money problem, the amount of economic growth unleashed by that will make the 1950s look like nothing. Because there's a lot of pent-up demand, there's a lot of pent-up innovation that has not yet been unleashed. The question is, do we get it right to allow that to happen? At the other end of the spectrum, the really dark stuff is, if we're repeating the 1930s, do we repeat the 1940s? And so that's the kind of stuff we would like to avoid. by any kind of way that we can fix the system before it gets that far.
So if we get the economics right, we can avoid the political turmoil. But what about the inflationary tendencies?
Well, as long as the dollar system remains as it is, there are no inflationary tendencies because dollars are being destroyed rather than being created.
As long as the dollar system.
Exactly.
A
That's
good
always
caveat. Well, thank you very, very much, Mr. Snyder, for joining us.
Thank you very much for having me.
And I
Pleasure
trust
to be
you'll
here.
enjoy yourself here in Cayman, and I know that the audience will be most receptive.
All right. Thank you.
All right, to our listeners, we're going to pause and take a break, but please join us back after this next break. Get a chance to speak to Mr. Simon Mikhailovich. We're going to talk about gold. Stay tuned for Talk Today.
Cayman Islands' foremost listeners participation program. Because there are more questions than answers.
What the public is saying.
Waging to take your calls right now. Sterling Dwayne Ebanks.
Hey, good afternoon. Welcome back to Talk Today, and thanks for joining us here on this special edition of Talk Today as we bring you live the Cayman Investment Forum. And joining me is our own Kathy Miller. As we have a chance now to speak to our next guest, Mr. Simon. Kathy, I'll do my best. Mikhailovich. Perhaps you do better.
Mihailovich. The K is silent.
So say it again for me.
Simon Mihailovich.
Mihailovich.
He is the co-founder of Tocqueville Bullion Reserve, where he manages private bullion holdings on behalf of institutional and private clients. Mr. Mihailovich received an MS in Business Finance from the University of Baltimore and a Bachelor of Science from Johns Hopkins University. Prior to founding Tocqueville Bullion Reserve, Mr. Mihailovich co-founded Edisys Capital, I hope I said that right, a special situations investment firm formed in 1998. Since inception, Edisys has raised and deployed over $2.5 billion of capital through special opportunity funds focused on high-yield corporate bonds and loans, credit derivatives, distressed CDOs and mortgages, and gold. Simon Mihailovich will be discussing history's reserve currency, such as physical gold. With rates, asset values, and debt levels at all-time records, traditional diversification practices no longer reflect today's realities. Mr. Mihailovich will touch on portfolio inclusion of truly uncorrelated assets like physical gold.
Hey, thank you very much, Kathy, and Mr. Mikhailovich. Thank you for joining us. I have to change my notes now because I was thinking we're going to be talking about restaurants and the best way to grill a steak.
The great food on the island, so there's plenty to talk about.
There you go. Well, I will get your pointers before we leave, but thank you and welcome to Cayman, and hope you enjoy your stay here with us as well.
Thank you very much. It's been wonderful so far.
When we think of the idea that there's a change in paradigm when it comes to investment strategies, a change in face not only of currencies and the approach to investing, but the investor has changed from that individual in the late 90s, early 2000s that overnight internet sensations and through that bubble became multi-millionaires, to those who have the old wealth and want to preserve it, to the challenges that we see to currencies and the return almost to something with a historical stability, gold. What does that mean for us?
Well, first of all, as you heard at the introduction, my background is not in gold.
Right.
And I've been an investor for 30 years. My specialty has been in credit and in complicated instruments, some of which were involved in the 2008 crisis. And so seeing the perversions, I would say, in the financial system in the early to mid-2000s, my partners and I started preparing for that crisis and did well. But after the crisis, it seemed to me that the problems that crisis revealed had not really been solved. So the way the crisis has been ameliorated, let's say, was through further bailouts, more money printing, further credit creation. Like, for example, if the crisis was about too much debt, we have 40% more debt globally today than we did in 2007. So that seems to, if that's the solution to the original problem, it's probably not a good solution. So the way I came to gold is not so much because I have any affinity for gold, but seeing it as a solution to the problem of financial assets and overproduction of financial assets, if you will. What we saw in 2008, which was very instructive, is when people considered to be diversification, stocks, bonds, all suddenly moved in the same direction. And of course, today we're seeing interest rates at 5,000-year lows. And that's not a joke, it's absolutely true. Those people who study finance know that when interest rates go down, asset prices go up, or financial asset values go up. It's a formula. It's called present value formula, and it works very mechanically. So if we're at the absolutely 5,000-year lows in interest rates, that suggests from financial sort of technologies, how people value assets, that the asset price is at 5,000-year highs. Now, when I went to business school, they taught me that you're supposed to buy low and sell high, and not buy high and try to sell higher to some other guy who wants to pay more than you did. And so in that sense, I started viewing the options that are available to investors, and I realized that there has to be something that is different. So gold, the way I came to gold is I realized that gold was not correlated to financial assets, not just because it doesn't have cash flow, which, by the way, is what people say is bad thing about it.
The liquidity bar.
Right. A bar of gold does not produce any cash flow. But at the same time, it's not valued using that same formula that is used to value everything else. So it's good to have something that has a different way of being valued. That's a diversification. The other thing is all financial assets rely on financial institutions and capital markets. A physical gold bar is nobody's obligation. It's not a promise. It's not debt. It's just a piece of metal. So the other way to diversify is to have something that's nobody's liability to you. It's not a promise to pay. Gold bars don't default. They don't go bankrupt. They don't restructure. They are what they are. So in that sense, and of course they have a 2,000-year or 2,500-year history of being money. And even if not money, they have value. They have market value that's available 22 hours a day, 5 days a week. So of all the assets that are not financial assets, what I came to the conclusion is gold was the only non-financial asset that was liquid. You know, a house is not a financial asset, and it's maybe a store of value, but it isn't liquid. Gold is liquid, it's nobody's liability, it's independent, it's lasting, and it's scarce. Nobody can print more. And that's what attracted me to gold as a way to diversify one's portfolio. Something real, but yet something that offers liquidity at all times.
And it has a high appeal so that demand is there, as it were. Now, from the perspective of gold being that, are we seeing potential then that more currencies, maybe the US dollar, will go back to being backed by gold?
Well, because so much money has been printed and the credit has been expanded to the level that it has, I think it has become sort of a faith-based initiative. It's based on confidence of people. And in general, credit, the word credit comes from the Latin word credere, which is trust, which is faith. And so to the extent that faith continues, I don't see that happening. But gold is inversely correlated to confidence. Always has been, always is. Even after 2008, we can see that gold price has risen dramatically. Even though it peaked in 2011, and as fears of the crisis subsides, the gold price has come down. It's still, if it's today at $1,250, $1,280, $90, it was in a $700 range during the crisis. So the price is up 80% or so from the time of the crisis. So I see gold as a very good inclusion in people's portfolio in a way that something different. Demand for gold is actually quite low today because the confidence is very high. So as I said, it's the opposite of confidence. So for as long as confidence remains high, everything is fine. But isn't that how all confidence games go? So long as people have confidence, everything's fine. And when people lose confidence...
So the fear that people will not hold gold for its intrinsic value then. But when we look at the notion of the fiat currency, could we conceivably see a situation where the US dollar, given its impact on the global economy, the confidence, the faith that we have in that as a sort of a faith-based currency, being so eroded that people will rush and then the US dollar becoming significantly devalued?
Well, I mean, this happened in the 1970s. I mean, in 1971, President Nixon closed the gold window. In other words, stopped convertibility of US dollar into gold. Because if you look at the US gold reserves at that time, they declined from 22,000 tons to 8,000 tons. So at some point, Nixon and his Treasury Secretary realized that if they continue to pay out gold in exchange for US debts, the US will run out of gold. as soon as that convertibility was suspended between 1971 or 72, let's say, January 72 and January 1982, the dollar has lost 65% or 60-some% of its purchasing power. And most of that happened in the period of 4 years. So yes, it can happen, and it is likely to happen again. So I would think not in terms of the nominal dollars, but in terms of the purchasing power.
Yeah.
Yes.
Potential inflationary tendencies. For those who are listening, Mr. Simon, and they were thinking of investment strategies, economic stability, and that potential sort of portfolio, what should they be considering? I mean, 2 or 3 things.
Well, I mean, I think people should consider things that are not directly tied to the financial system. I mean, for example, your own business is not tied directly to the financial system. Of course, you have economic risk, but you are much more in control than you are in owning public shares in a company of which you have no connection to. Property, real assets. Some people buy art, but of course you have to be an expert in that. And I think people should own some physical gold. Now, what I want to emphasize is the difference between physical gold and gold securities is the difference between owning a cattle ranch and cattle futures. If you own a cattle ranch, you have access to the beef and the milk. If you own cattle futures, you just have access to the price of the cattle and nothing else. And even that access is somebody else's promise to give you money if something else happens. So if the other person can't give you the money, you have nothing. So I think that people should focus on real things and real assets that they have within their grasp, as opposed to financial assets, which has been the pattern for the last, say, 30, 40 years.
Well, certainly thank you very, very much for sharing with us, and I hope you enjoy your visit with us and the rest of the conference.
Thank you very much. Thank you for having me.
To our listeners, we'll pause and take a news break, but join us when we come back. Stay tuned for Talk Today.
Cayman Islands' foremost listeners' participation program.
Talk Today.
Because there are more questions than answers.
What the public is saying.
Waging to take your calls right now. Sterling Dwayne Ebanks.
Hey, good afternoon and welcome back, and thanks for joining us here for the 5th Annual Cayman Investment Forum. And joining me is Catherine Miller as we have the next opportunity to speak to our guest, Tour de Meester. Cathy, would you be so kind?
Yes, thank you. I do like to say that we did interview him and record a tour for Money Sense, and that was the most elusive way we had to get a hold of this young gentleman. Different phone numbers. I think you had routed us to Russia and back. I don't know, but it seemed a little elusive getting a hold of you.
He's traveling, he's working, he's busy.
Yes. I'm introducing Tour de Meester, an independent investor, commentator, and the founder and editor-in-chief of Advent Research. As an expert in cryptocurrencies, he has been featured by numerous media sources, including Zero Hedge and Real Vision. He first discovered Bitcoin on a research trip in Argentina and started recommending it as an investment at $5 in January 2012. He has participated in angel investment rounds, including for an cryptocurrency exchange, Kraken. Mr. de Meester will explain what cryptocurrencies are, describe their value proposition, note the risks, and speculate about a future in which private currencies play an increasingly prominent role.
Well, thank you very much for that, Cathy. Now, Mr. de Meester, as we look at, first off, cryptocurrencies, crypto capital, many listening would probably not quite be as familiar with that, with blockchain technology and the like. So we invite you to share with us, give us a better understanding, and hopefully position us to be better informed investors.
Yeah, so Bitcoin came from the cypherpunk movement, and cypherpunks have been around since the 1980s, and there were people who saw that you could use cryptography maybe also to the benefit of individuals. Maybe you can use it to protect your privacy, so out of that movement came PGP to encrypt emails. And so early on they also started thinking about, how about we create an electronic cash, right? The equivalent of gold, maybe an electronic gold that you can hold and you have sovereignty over and you control without the need for a central institution, a central point of failure. And so out of that 20-year effort eventually came Bitcoin, which was created by an anonymous person named Satoshi Nakamoto. It could have been a group of developers as well. And so basically it was a piece of software and a white paper. And the basic idea is that you allow for this payment network to be decentralized by allowing everyone to verify the entire history and all of that is cryptographically connected, so that you don't need a central authority to validate transactions and to make sure that nobody counterfeits money.
Now, from that perspective, as we've heard from a few in the past, including the guest before you, Simon, share that, well, we won't necessarily see Bitcoin being that technology. Jeff Snyder shared likewise as well. Why is that? Is it the lack of a central authority has been the traditional custom to regulate, monitor, and profit from the use of a currency? The cryptocurrencies not necessarily allowing that sort of governmental intervention.
I'm not sure I understand the question.
With respect to cryptocurrencies and Bitcoin specifically, there is speculation that it will not survive. It will not be around. It will not be that medium of exchange going forward to replace the traditional currency system that we have.
Yeah, absolutely. I mean, it's very early on, right? The Bitcoin is only 9 years old. There's a bunch of spin-off currencies that are a lot younger even. So, like, for us now to speculate, is Bitcoin going to be around in 50 or 100 years from now? Is it going to supplant? I think that's really premature to say. I think what you can say is that it's quite remarkable that it has survived for 9 years. It has had an uptime of 99.9% in terms of, if you look at it as a payment network compared to maybe PayPal or Visa. And so I think it's a very compelling value proposition. The technology is sound. It's continually being developed. We are seeing scaling of Bitcoin where you'll be able to have thousands of transactions per second eventually. So obviously the risks are high, but so are the reward potential for people who invest. The current market cap of Bitcoin is $75 billion, which in the grand scheme of things is a drop in the bucket if you want to compare it to other liquid stores of value. Because I think that's really what Bitcoin is about. It challenges maybe gold or government bonds or cash. It's just another option to store value for the long run. And what is so appealing about Bitcoin is that the monetary policy is embedded in the code and it cannot be changed.
No, with that, there is that credibility in a sense, the security of it. But then it's still, in people's minds, it's denominated, one Bitcoin is equivalent to X dollars. We've seen over the last 5 years or so, the relative exponential increase. But how do we get it to where it's Bitcoin being the currency of value?
Right. Yeah. So because money evolves very slowly historically, if you look at how gold became money, or even if you look at shells that were used as money and other things like tobacco at some point, we're not that intuitively aware of how money becomes money. But the way it evolves is first it's a collectible, and then it becomes a store of value, and then it becomes a medium of exchange, and then finally, the final step is that it becomes the denominator. Everybody expresses prices in dollar, but that's the very last step of when something is a money. So to say today, well, we don't express prices in Bitcoin, therefore it can't be money, I think is maybe a bit too fast. I think still we could see those things evolve. But right now, Bitcoin is just a collectible, and for a couple million people, it is also a store of value.
The perhaps reluctance or the failure to take up of Bitcoin, is it because the establishment's power, ability to move and to keep Bitcoin where it's at, as opposed to the relative attractiveness to the emerging economies of what this currency sort of medium exchange would offer?
Yeah, I think actually the hurdles to Bitcoin adoption so far is not so much regulatory scrutiny or anything like that. Actually, governments have been pretty hands-off. It's been more just a user experience thing where, just like in the early days of email, an email address was not a name at something. It was a long string of code and quite complicated. So the same with Bitcoin. People are building more accessible tools, and they're also working on scaling, because right now Bitcoin transactions are a little bit expensive for the retail level. And then when it comes to adoption as a store of value, it's still challenging to store Bitcoin in a safe way. Like that infrastructure is still being built. Everybody probably has heard of some of the stories before of some exchanges getting hacked and Bitcoin getting lost. That's not a failure of the protocol. It just shows that the industry is immature and that discovering how to store it securely is still being developed.
So in a sense, it's not unlike, in the days of the Wild West, the stagecoach, being robbed, whether it was Wells Fargo or otherwise, to today, the physical bank being robbed. Similar?
Yeah, I think there is some similarity, maybe especially to the wildcat banking era of the 19th century in the U.S. There was no central bank, there was no rescue. If your bank was being robbed, then possibly you would lose the money. So you had to be careful about where to store it. But that didn't mean that gold was not a good place to have your value at, right? Gold was pretty great, but the infrastructure, you had to be a little careful because it was a bootstrap country, basically.
Right. Now, for those who are listening as we speak into Third Minister and the idea of cryptocurrency and Bitcoin, could you help us to understand utilization? If someone now wants to get into Bitcoin, want to use it as a medium of exchange, they may be familiar with PayPal, as you mentioned, they may be familiar with using other electronic means of payment, but do they go around the store and buy Bitcoin like they would a gift card? How do we get into it? How do we utilize it?
Yeah, so it's one thing to buy it, and then the other thing is like, how do you use it? So if you want to buy it, you open an account with a cryptocurrency exchange. There's a lot of them, and you can kind of think of it like a brokerage account. So that'll be Kraken.com, or it'll be you go to Coinbase.com, open an account, and then you wire some dollars there, and you buy the Bitcoin. And then if you want to, that's the beauty about Bitcoin, is that you can create your own wallet and then literally send those Bitcoins to your own wallet. So you don't even have to trust an exchange. You can completely store it in your own control. And then if you're a little bit more serious about it, you can think about buying a hardware wallet, which is a little device that fits into your USB port on your computer. And that allows you to store the Bitcoins off your computer, so that if your computer is infected with a virus or some hacker sees what you're doing, your Bitcoins are still safe. So that's something that I always recommend. Look at hardware wallets such as Trezor or Ledger. So that's when it comes to buying and storing, is you buy them on an exchange, store them on the hardware wallet, and then if you want to use them, it kind of depends on your situation. Maybe you have a family member who lives abroad and there's not a great dollar connection, so especially money from maybe Europe to the US or some Asian countries to Latin America, things like that, then Bitcoin becomes interesting, where you buy Bitcoins in the local currency, and then you send them to your family member, and then they will sell it wherever they are in the world. That has been used. Most use cases right now are business-to-business transactions, because once it gets a little larger, it's more interesting. Some remittance applications, but really store of value, in my opinion, is the most interesting use case.
Use it for security and then that level of sort of confidence, similar to gold in a sense.
Yeah, like the censorship resistance, that's really what it's all about. Is you don't have to trust anyone. It can be in your own control. Your Bitcoins cannot be frozen if they're on your own wallet. You can always send them. As long as you have an internet connection, you'll be able to send and receive Bitcoin. Even if you're in the desert or in Siberia, there are Bitcoin nodes on satellites that you can reach via satellite. So it's pretty powerful technology.
Now, as you sort of think of this particular conference and the evolution of cryptocurrencies, where do you see it going from here?
I see continued adoption. I see the ecosystem continue to evolve. Right now, I think we're in the phase where institutional money is moving in. A lot of large funds are interested in investing. They're still kind of figuring out how. And so in response to that, we have a whole string of smaller funds that specifically invest in cryptocurrencies and that offer a gateway. Because right now there is still no ETF, for example. There is no Bitcoin ETF. There are some assets that are trading on the stock exchanges, but because there are so few, they trade at a very high premium. So right now we're still in the early stages. Maybe Bitcoin's 1995 moment will be in 2020. Maybe in like 2-3 years from now, there'll be a moment where it'll become more mainstream.
All right, Third Minister, thank you so much for joining us, and again, I invite you to enjoy yourself while you're in Cayman.
My pleasure. Thanks so much.
So, listeners, we'll pause quickly and take a break, but when we come back, more Talk Today.
Cayman Islands' foremost listeners' participation program. Because there are more questions than answers.
What the public is saying.
Waging to take your calls right now. Sterling Dwayne Ebanks.
Hey, good afternoon. Welcome back. And thanks for joining us here in this special edition of Talk Today as we have another chance as we speak to Ms. Amy Hubble from the CFA Society here in Cayman.
Yes, thank you.
If I may, I'd say, well, have you just share with us what is the CFA Society and why this particular conference and why is it important to the country?
Yeah, the CFA Society it's really a global grouping of professionals that hold the Chartered Financial Analyst designation, but it's really more than that. It's really a thought leader and a global thought leader in investment management, in ethical practices, and really trying to push that through in our industry and really trying to create a lot of brand awareness. And especially on the island here in Cayman, we actually have the highest per capita proportion of CFAs in the entire world.
Wow.
Yeah.
Cayman is known for a lot of firsts. I did not know that one.
Yeah, absolutely. We're very proud of it.
Well, again, it plays, and I love this place. I'm proud of this place, the people I meet from all walks of life, from all different parts. And when they talk about, the good they see in Cayman, it makes me feel good. But it also makes me feel that we need to do more to preserve what we have, but also to promote who we are.
Yes.
And when we hear from, Cayman Finance, for instance, that we have #1 ranking in this, when we hear that on the hedge funds, when we hear that the government is passing legislation to make it conducive to do good business, but then look at some things and perhaps the media reports, for instance, that come December looming over us as another black eye potentially. Is this politics in a different landscape?
It is to some point, but we try to stay out of that at some point. And really, our organization especially is all volunteer driven. We're just a group of people that do actually care about the industry and that making sure that our industry does have that quality name going forward. And by proving through the CFA designation, that's kind of a show outwardly of that we have the qualifications that you should look for, maybe in someone that you're reaching out to help you with your money, that they are held to kind of a higher standard there. And so that's what we're trying to hope. And even looking at this event today is all volunteer run. We are completely nonprofit, and this is really put on for the Caymanian investment community.
All right. The CFA, Chartered Financial Analysts.
Chartered Financial
We have
Analysts.
CPAs and CMAs and all sorts of things, but you guys are the ones that actually make the money for investors. Huh?
We hope so. We try to.
For parents specifically, we trust that students are in school today and paying attention. We're not... for those parents who are saying to their children, once you get into the world of finance, give them a perspective of what is required, the acumen, the discipline, and as they go through, get their university education, their professional designations, because we want them to be the very best.
Yeah, we really see the CFA designation as the gold standard in financial education. There's obviously the CPA that you see in the accounting side, and the CFA is really the equivalent on the finance side. But to actually receive the CFA, it is a very, very difficult process. You have to have 3 years of experience directly with financial management. You also have to pass 3 levels, extremely difficult exam, and then you have to adhere to standards of professional conduct.
But again, it's not what we want from our professionals. A continued education as well, but
Yes.
that idea that the ethics, the integrity, the competence, the confidentiality positions them. And as you shared, Cayman is top.
Oh, and it is top, and there's so many opportunities here. I mean, for people coming out of university, to anywhere along the spectrum. Obviously, you think of hedge funds when you think of Cayman, but really across the board of money management and personal finance, and it has a global reach.
For those who want to get into finance and they decide that, perhaps they want to pass that, rigorous undertaking to test their acumen, the CFA, once they're designated as such, where can they go? What can they do? What sort of career path?
Yeah, it's mostly built for either someone who is wanting to be an analyst, the chartered financial analyst that is, which means you want to kind of dive very deeply into companies' balance sheets sometimes, But really, where the jobs are is more on the personal side. It really is trying to move towards kind of that total wealth management, kind of that holistic financial planning place that a CFA charter holder can really serve as the quarterback of that kind of situation.
Get that person to make the proper investment choices, relative estate planning and the like, whether they're working for a financial institution or maybe they set up their own shingle.
Yeah, absolutely.
All right. Well, as we speak to, I was thinking about Hubble, and I look at the name and go, Hubble, I know some Hubbles. But what drew you to finance?
I actually fell into it by accident. My dad's a banker, and so
I thought you were a science major.
I was a marketing major, actually, but I went to work for a trust company and really found a love for the industry and a love for people and a love for helping other people achieve financial goals through their finances.
And I say this, and I ask you if you will allow me, because many people have a perception that those in finance tend to be all about numbers. Mm-hmm. My experience is that, yes, that is essential, but there's a people side to it. And even though with the recent legislation over the last 10 years, the industry has changed. You're more respectfully, it's more CYA than KYC.
Absolutely.
But there's still that people side, that personal touch.
Yeah, I mean, it's half psychology, and especially when a client comes into my office and we're talking about these are the things that are affecting their everyday lives, and that's, even going back to the theme of this conference of money, money is not just something that we use to purchase investments. Ultimately, we want to use that money to accomplish our goals, to accomplish a comfortable retirement, that we can buy a house, so we can raise a family, and those are all things that are very personal to people, not just on a standpoint of what is your investment return on a basis points number, or which currency are we going to use kind of thing. It's something that applies to every single person on this planet.
I agree with you, and from that we see the perspective that people will want to build wealth in order to leave a legacy for lasting generations. They want to preserve the wealth that they have, not just because the tax man cometh, as it were, but how do they hedge against inflation? How do they make sure that there is something?
Absolutely. That's exactly what we're trying to do.
Now, from that perspective, with great respect to politicians and educators and parents and the like, what is your view in the western part of the world, not just Cayman, but this part of the world, the hemisphere, when it comes to financial literacy and education in our schools in the early years? What's your perspective? What kind of job do we do?
Yeah, that's a bit of a loaded question, because I do really have a passion for financial literacy.
Likewise.
It really is a very sad situation that we're in right now, and even a lot of the educational programs that we're trying to push on younger and younger children, a lot of them are not being found to be very effective in real life, because they don't necessarily have that thing to kind of tie it to. And what we are finding is that things like designations after you're out of college, something that you can see that, okay, I get this new degree, I get this new designation, I am going to be able to further my career for this, and this reason. And then even trying to push, students coming out right before they come out of either high school or college, kind of wherever that is right when they kind of get that fear in their eye of about to be out in the real world, and oh no, I haven't been paying attention to how I can even function when it comes to money. And that's when you really want to try to instill those habits, is right there when they want the information.
Now, obviously, some would say, well, you must be good in math in order to be good in finance, and I'm not good in math. And we make all these excuses, and we present math as this big ogre.
Sure.
How do we get over that?
I don't know. It certainly helps to be good at math. But when you think about being good at math, what does that actually mean?
Yeah.
It's being able to think logically through softwares that can help us make projections and say looking at a number, or looking at a balance sheet, or looking at a spreadsheet, not just being able to add those things or multiply those things, but what do those numbers actually mean?
The analysis.
The analysis and the interpretation is really where the value lies, not necessarily in can you solve for X.
Solve for X is easy. Making the.
It used to be. I don't know how to do it now.
I bet you still remember the quadratic equation. You could probably say
I do. I have a song in my head.
See?
For sure I do.
I'll get you to teach me so I can remember it. But thank you very much, Ms. Amy.
Absolutely. Thanks for being here.
Well, it was an honor, and I say, Kathy, thank you too for joining us. And as we close out the program, Kathy, what are your Your thoughts, your takeaways.
I do want to make a little joke about that, about not having to be good at math, because I think we can all remember, I think without giving away our ages here, but remember when your teacher used to say, you're not going to have a calculator with you everywhere you go? It is now the era of the smartphone and the little, whatever those little watches are, that which I don't have, but I know people at Radio Cayman definitely have. So really, we do have calculators everywhere we go now. Sorry, teachers.
We have calculators, and we even have dictionaries and thesauruses. And
exactly.
We'll never be without knowledge. Unfortunately, no, we need to understand that knowledge we acquire may not always be accurate and relevant or timely. The analysis, right, Miss Amy? All right. To our listeners, thank you so much. Thanks to Kathy for putting together this particular production for us for the CFA 5th Annual Investment Forum.
No problem at all. It was a great day. Hopefully we'll be here next year as well. I hope our listeners grasped what the speakers were discussing as well. If not, I'm sure a lot of what we discussed today, at least on Talk Today, will go up on the CFA Society website. So
indeed,
hopefully we'll get that information out. And as well, we always have Money Sense that airs every second Thursday, 7:30 to 8 a.m., which we discuss a lot of what you heard today. We will be discussing Bitcoin with Tur de Meester on next Thursday morning's Money Sense, so you can catch more with that.
Some of those guys do an excellent job. Thank you again, Kathy.
Thank you.